going on,
Everybody
guys?
ready?
We got
You could.
special guest here, Top
What's
Floor
going on, guys?
Trading. Yeah, we're
Yes,
gonna
sir.
we're gonna do a collaboration here. Yeah, let's do this. Today's agenda, we got presentation of SMTs, macros. That's what we're gonna cover, and then Johnny is gonna do quarterly theory with the higher time frame analysis, and then we can do what we're gonna expect going to next week as well, and then we can get some question from you guys. All right. All right. So here we have what is SMT? SMT is short for smart money technique or tool. Most people overlook what SMT really does. They just know that it's the cracking correlation between pairs. You know, if you're trading Forex, you can use EU and DXY as a correlation between pairs. If you're trading indices, you can use ES and NQ as a correlation between those pairs. So, how do you find SMR in the MMXM? Well, first you have to know the definition of SMR. SMR is short for smart money reversal. You can find SMR with SMT, as it is in the name itself. Smart money reversal is found with smart money tool. You can look at a 4-hour key level, and you can have a 15-minute market maker model framework. What is the importance of SMT here? Well, SMT is how the market moves, man. You know, it is the start and the end of every move in the market. If you don't believe me, you can go look into your own charts. Uh, Now we have macro. What is macro in trading? Macros is a specific time where price accelerates towards the draw or liquidity. It is also where most of SMT happens. What are the macros here? Well, there are two different types of macros that are public. Okay, first I'm going to tell you about the top of the hour macros. They start with the XX50 and XX10. But before going deep dive into the macros, I will need you to understand about open low high close and open high low close and what they mean, you know. So here, open low high close is a bullish candle. We have open, low, high, and then close. And then a bearish candle is open, high, low, and then close. Right? So from here, you can expect a macro in between them. Now this is two bullish candles. You can have basically like the 950 to 1010, open, low, high, close, and it opens up again, open, low, high, close, and then 1050 to 1110, open, low, high, close. Now this also works in not just the hourly, this also works in 4 hours. You have open, low, high, close, 950, 1010, open, low, high, close, 1350, 1410. You guys might know this as the silver bullet hours. And this is why the silver bullet hour works. All right. So now that you know that, we have a turtle soup macro. The other macro that I use, which is a turtle soup macro, they started in XX20, XX40. It has the same concept as the top of the hour macro, but it is mostly used for the turtle soup, hence why the name is turtle soup macro. Again, you know, open low high close in the 920 and 940. Open low high close 1020, 1040. You guys might be wondering, what is a turtle soup? Well, it is a strategy that is taught by Richard Dennis and William Eckert in the 1980s to a group of novice traders called the turtle traders. It was originally a trend strategy. The turtle traders actually had a trend following strategy that used breakouts to get in the market. What do? We soup those turtle traders by taking their stops, bro. So here is an example. Well, not example. It's a rule. The rule of turtle soup is that you buy low and sell high, but never buy high, never sell low. Here we have an example in the chart. This is the turtle soup. It goes higher, and then we soup this again, and it goes lower. This is Friday's action. Now I want to show you guys here the macro. Well, where'd it go? Not that one. This one. There we go. This is the 1020, 1040 macro. As you can see here, we have a SMT. How do you know there's a SMT there? Well, we can look and check between the other pairs. You have ES is at the top, NQ in the middle, and then YM at the bottom. As you can see that ES actually failed to take it. Well, NQ took it, and YM failed to take it as well. And that itself is SMT within the macro. And you can just, see that where it just dumps. Now with this one, it was 10 o'clock right here. Yeah. Gonna do this real quick. You have 950, 1010. This right here is a macro. So where's the SMT though? Well, that's why you look at the other pairs, right? Because it's cracking correlation. So you have this right here where NQ took it. ES also took it, but YM failed to take it. You can enter slowly right here. Once we are in the macro, we have an SMT and target swing highs. I personally like, if you want to do a stop, like a 10 to 20 point stop. And that would be like a really good RR. But
So
that's
what
really
do you
up to
enter
you.
on?
Yeah. I would enter
So
on turtle soup.
it's obviously fractal because you can use the 15 since you guys trade the 15 on that, but it's fractal. You can use the turtle soup on the 15-minute, and you pretty much don't use PD rays rather than highs and lows gonna be your PD rays as you're gonna soup them pretty much.
Yeah. Yeah. That's right.
It's fire. You even have a unicorn right there. On the lower time frames on probably the 15-second, but you have one right there in the internal structure. Right after turtle souping, you could even use the unicorn as a pyramiding entry. So
Yeah,
that's fire.
100%.
Yeah, 100%. You could also, that's another thing, right? About unicorns, they use breakers, right? What
Yeah.
else can you do within a macro? Well, breakers form in macros. Like in my opinion, if I was trading unicorns, I would look for unicorns inside of a macro or a little bit, even like a little bit after it, and then taps it and goes.
This is the real criteria of macros that people don't tell you about, right? It's pretty much like a power of three of a bigger time frame candle that offers the entry and then offers the acceleration towards drawing liquidity. That's all it is. It's not
Yes.
a random time of the hour. It's just a bigger time frame candle playing the power of three.
Yep. That's right. That's right. And in this example here, we also have like where can you target? Well, this was NFP. You can target this low. I think most of our inner circle actually took this and rode it all the way down.
Just buy, hope you caught the low. Nah, man, that's not how it works.
No, that's not how it works. There's also multiple things that goes into this, in which it's not gonna be presented publicly, but there's a lot more in depth. That's right. But for now, I'm gonna let Johnny do his presentation here. So Johnny, if you have a chart or anything like that, I'm gonna let you do that, bro.
All right.
All right, bad
We're
bro.
gonna
I
go.
should have done a little presentation like you, but we'll just dive into the charts.
Yeah, no
Yeah,
problem.
yeah.
Let me
We
turn
can
on.
come back into our questions after the Johnny's thing.
Yeah.
For some questions. Yeah.
All right, brother. Give me the screen sharing.
Oh, yep. Let me find your name. Where you at? Johnny. Can't find it, bro. Found
Like your eyes,
Uzi.
dog.
Thank you, man. Oh, here you are. Screen share. Allow. Record.
Printer said that's what I'm saying. When do you know the proper time to enter a position of a fair value gap or block? Now we don't use that. We just pretty much use either a soup. It has to be inside a macro because
Wait, what
we
the hell?
preach time a lot. So
Yeah.
yeah, first it has to be inside a macro, and then other criterias are not gonna be shared today. We can do a little private presentation between if Johnny is okay with that, and then we can go over it more in depth.
Yeah.
Hey, Zephy, I think you're asking me to share like my camera.
Oh, my bad. Is that the wrong one? My bad. My bad. It doesn't really say anything else, bro.
Enable. I don't know how to do this shit on Zoom. I've never really used Zoom.
Me either, bro.
Recording in progress.
Hey yo,
It's my first time using Zoom. I go cut.
Got it. Share screen. You probably have to like enable it on my name, like the screen sharing. I don't know if you could do that.
1 sec. Trying to find your name. Where'd it go? There we go. Chat, pin, hide, make host. Maybe I'll make you host. Yeah.
Yeah, I
There you
think.
go.
Okay,
You're host now.
there we go. Okay. Screen one. Is this it? Share.
There you go.
You guys see my screen?
Yes.
Okay, cool. Wait, how do I remove the bottom? Okay, never mind. Okay, well, Zephy pretty much covered a lot of the stuff there. SMT divergence is the Kraken correlation between the correlated assets. It pretty much gives you a clue on what smart money wants to do. So I'm gonna go over. I think we'll probably go over quarterly theory first before how I do like my higher time frame analysis. But
Yep.
like Uzi said, time is fractal. Or I mean, not time. Price is fractal, meaning that the patterns that you guys see like on the 1 minute chart are going to happen on the higher time frames, like the 1 hour, 15-minute, etc. Now, hold on. Let me close out my Discord because this shit is distracting.
All right.
All right. Anyways, okay. So quarterly theory. If you guys, who here is familiar with quarterly theory? Looking at the chat right now.
Several people. Yeah. Yeah.
Okay, so you guys know that quarterly theory is either AMDX or XAMD, correct? Those of you that know of it.
Yes. 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 Yep.
Okay, so if it's AMDX or XAMD, it's one of those two. We always want to trade the last 2 quarters, right? So if it's AMDX, you want to trade the distribution phase and the X phase. What is the X phase? The X phase is, which if we look at the bottom right here, this little indicator, it says week and day, right? So this we'll focus on the weekly right now.
Mm-hmm.
So the last 2 squares right here is going to be quarter 3 and quarter 4. So in this weekly profile from Monday through Thursday, because Friday has its own function, through Monday through Thursday, this looks like XA, or actually this kind of looks like AMDX, right? Because Tuesday looked more of like a manipulation move. And it's kind of like you kind of have to like, what's the word I'm looking for? You kind of have to identify it on your own. There's no indicator that's going to tell you really like if this is A or X. You kind of have to like, okay, is this accumulation? Does this look like accumulation, or does this look like X, which X means reversal or continuation of the previous quarter? right? So Monday right here on ES looks like accumulation, right? So if this is accumulation and this is manipulation, then the next 2 quarters are going to be distribution in X, right? So X, again, meaning is the reversal or continuation of the previous quarter. Now, this is where SMT comes into play with quarterly theory. I do my analysis mainly on the higher time frames. This is where I derive my ideas. I always get it from the higher time frame narratives, right? I always use the higher time frames, of course, to form my narratives and get my trade ideas and stuff like that. So last week on Wednesday, right, which is the start of quarter 3 here, this green box on the weekly, this is distribution, right? Now, when quarter 4 started, which is in the Asia session of Wednesday going into Thursday, this is where we want to look for SMT between quarter 3 and quarter 4. Because when you get an SMT between the last 2 quarters, this is more of a high probability trade idea forming, right? And I called this out last week to my group. I was looking at the Asia session on Wednesday, right, going into Thursday. And if you notice here, we were getting SMT at these lows right here, right, at these Tuesday Asia lows right here. If you notice on, where is it, on NQ, we take the low here, right, Tuesday Asia lows, boom. And if you notice, if I hover my mouse over here, this is still within the quarter 3 of the weekly profile, right, which is distribution. And this is X, right? Remember, continuation or reversal of the previous quarter. So if we're getting an SMT divergence here, right, boom, and then on YM as well, then we have it right here on NQ. So NQ and YM take the Tuesday Asia lows out. ES refuses to do so. And if you are, trading London session, if we go to down to the 15-minute real quick, actually, let me mark out this 1 hour fair value gap here, right? We have this 1 hour fair value gap. So this is important. Now we go to the 15-minute, come over here. If you're trading the Asia session and you're looking at midnight opening, right? You have equal lows forming right here during London session, right? So when these equal lows are forming and you're noticing that these relative equal lows are forming, you can actually anticipate a turtle soup here because you're already getting the SMT on the 1 hour time frame, right? And you have a 1 hour fair value gap right below those relative equal lows. You're getting SMT, you're within quarter 3 and quarter 4. Quarter 4 meaning X, potential reversal, potential bullish price action, right? Just based off this SMT idea in the quarterly theory. Now using the higher time frame PD arrays under these relative equal lows, this is a high probability chance of turtle soup happening, just using, SMT and quarterly theory here. Now you're below midnight opening, you have an SMT, you got a higher time frame PD array. All this is coming into play. Like all this is just blending together. And it's giving you a high confluence of potential bullish action happening, right? And I often tell my group this, and I often let them know that 3 a.m. is a time on where a lot of turtle soups happen. I'm sure that you, Zephy, and you, Uzi, you guys know this. 3 a.m. is it's like a prime time for turtle soup, right?
100%.
100%.
That's where the low or high of day usually forms later on in the week, especially with the week with all this high impact news that we had the previous week. But if you notice here, look at what time the low of the day comes in here, right? Well, I have mine set to Central Standard Time, which is an hour behind EST. So this is 3 a.m. right here, right? Oh, yeah. Shit. The free meeting will end in 10 minutes.
What?
I just got an alert.
I just did too.
Saying that's going to... Oh, shit. All right, well, let me try to wrap this up. Anyways, so when you see these relative equal lows forming with the SMT and the quarterly theory between Q3 and Q4, you get this turtle soup right here, right? You could definitely turtle soup this in this 1 hour PD array, 1 hour FVG. Now, I use, I like to use higher time frame fair value gaps. I mainly use fair value gaps in highs and lows, swing highs and lows, that is, to do my higher time frame analysis. If I'm seeing something like on the daily, where am I going with this? like the daily candles, just like you said, the open, high, low, and close.
Yep.
I need to see where these daily candles and weekly candles are going to be expanding to, right? So again, if you're using quarterly theory and SMT divergence, you can pretty much time the low and high of days just using this idea, especially between quarter 3 and quarter 4. You always want to trade the last 2 quarters because the first 2 quarters are going to be either XA, right? You don't want to trade accumulation. Accumulation is going to be like sideways price action, is just accumulating, right? And then X is reversal or continuation of the previous quarter. If it's XAMD, you want to trade the M and D, right? The manipulation and distribution. Or if it's AMDX, you want to trade the distribution or the reversal or continuation of that distribution phase. So you want to focus with quarterly theory, in my opinion, you want to focus on quarter 3 and quarter 4 because you can get potential trade ideas like this. This is like a one shot, one kill model. You really only need one of these a week to really make a fucking bag. Like if you were to catch this turtle soup down here in London session, you would have made a bag. This is like the only trade that you need.
Yep.
Just using this theory right here, right? And then using higher time frame analysis with it, right? You use the lower time frame entries, and then you start blending the higher time frame analysis with those lower time frame entries. For example, if you were to turtle soup this on the 1 minute, if we go to the 1 minute real quick, let's see. Say you turtle soup it down here on the 1 minute, right? Boom, you turtle soup it down here, and you guys said that the macros. Well, I guess this is 250 to 310, but yeah, you could turtle soup it here and then place your stop under the 1 hour candles low, right? Of the one that formed the fair value gap. You could enter anywhere down here, right? And there's also a unicorn model here on the 5 minute as well, just by recognizing this. But you could enter here and then go to the 1 hour, for example, because I'm pretty sure some of you guys get chopped up just staying on the lower time frames. You can go to the 1 hour chart and you can use fair value gaps as a draw on liquidity. You can use this manipulation move. You can set your standard deviation on the 1 hour, right? And these give you projections. And look at where the projections land. They land at this 1 hour swing high, this buy side liquidity. So this is when you can start blending in higher time frame targets with your lower time frame entries, maximizing your reward potential and minimizing your risk as much as possible from the lower time frame entries, if that makes sense, right? You're using the higher time frame draw on liquidity to take profit from your lower time frame entries. That way you can, again, maximize reward and minimize your risk.
Yep.
Yeah.
But I mean, that's
100%.
that's how I'm viewing the markets right now. I've been live testing this quarterly theory thing. And obviously I've been familiar with quarterly theory, but I'm now getting into like the SMTs between the quarters, which is pretty powerful if I'm being honest. I know the meeting is probably about to end here in a little bit. I'd love to show you a lot more, like on the 4 hour and the monthly cycles and stuff like that. I don't know if you're gonna pay for more time or not, but
let's see.
Are we good? You can go over it. We good.
okay.
I think our members are interested in this, so you can go over it.
Yeah.
My dog said you can keep the QT sauce. Hey, bro. Again, it's not for everyone. If you're used to whatever model you're using, then continue to use it. You know what I'm saying? Whatever works for you works for you.
Exactly.
But I promise you, there's going to be some times where your model might not be as effective in the markets because, again, the markets change, bro. They're not the same. Like the 2024 markets are not the same as the 2018 markets. You know what I'm saying? So
100%, yeah.
sometimes, you might want to learn some new stuff so that way you can just keep it in your, you know what I mean? Like your trading arsenal. So that way you could bust it out later on and, use it, just increase your edge, sharpen your edge, refine your edge. It'd be foolish for me to even say, I've been in these markets for 5 years already. It'd be foolish for me to say that I'm not learning new things every single day. I always love learning. Wish I just got that message. I love learning new things about trading. I love refining my edge. I love, you know what I mean? I love just learning new shit, bro.
Yeah. I just paid it, so Johnny, you can go how much you want, bro.
All right, cool.
Yeah.
All right, so let's go to the 4 hour real quick. And I'll just show you guys real quick here. I'll just show you guys all this. Let's show with the QT theory. So let me pull up the monthly quarters. So we'll be paying attention to like these little boxes down here. They go quarter 1, quarter 2, quarter 3, quarter 4. Okay. So like if I'm taking off the daily quarters and I'm just focusing on the weekly and monthly quarters, you could see that all the reversals start with SMT divergence, because SMT divergence is a cracking correlation between the correlated assets, right?
Right.
So, for example, right here, right? Let me zoom in a little bit over here. Right here, ES makes a higher low while NASDAQ makes a lower low, right? And YM, same thing. Boom. And look at the quarters, right? Monthly quarter, this is monthly quarter 2 and monthly quarter 3, in which this SMT divergence is occurring on the 4-hour time frame. So just with this idea, you're seeing this, right? You're seeing this on the 4-hour between the monthly cycle, quarter 2 and quarter 3. And again, these quarters, the best SMTs happen like with the what's the word I'm trying to look for, with the, so you can have an SMT from quarter 1, quarter 2, and quarter 2 to quarter 3, quarter 3 to quarter 4, and so on, right? Quarter 4 to quarter 1. So you have an SMT here at quarter 2 and quarter 3. So right here, just off this, and you're seeing this SMT between these quarterly, these quarters and the quarterly theory on the monthly cycle. You could start to zoom in, and now you have a potential trade idea for bullish price action. And then you're looking at the higher time frame, again, relative equal highs. You have liquidity resting up here. And now you have like a potential trade idea forming, right? Now you're bullish just based off this SMT, this cracking correlation here, because NASDAQ is forming lower lows, ES and YM are forming higher lows, right? So you can start to zoom in here into this price action right here on Wednesday's price action here, because Tuesday and Wednesday have a 75% chance to form low of week.
Yep.
So with all of this just blending together, you could start to zoom in into the 1 minute and start turtle souping somewhere over here. And then you could use the higher time frame draw on liquidity to, again, maximize your reward while minimizing your risk with your guys's, macro theory, your whole like time theory that you guys got going on. So all of this blending together, using the higher time frames and going into the lower time frames like you guys do, can work really, really well, especially if you're using, SMT on the higher time frames and looking at the quarterly theory. This, in my opinion, is enigma, bro. I'm not gonna lie. Like this shit is crazy, bro.
Yeah.
Yeah.
This shit is crazy. This will
Gives
give
you a
you
bias, right?
Yeah.
It gives you a bias to either swing it or like scalp it on the lower time frames.
Yeah.
Looks good,
exactly.
man. Yeah.
Exactly. Like I won't use quarterly theory by itself, but when you have an SMT between the quarters, this just gives you like a potential trade idea or a narrative on the higher time frame. So that way you can mix that in with your, lower time frame entries. And if you get in down here, then again, you could just hold the swings up to the higher time frame draw, the higher time frame DOL.
Right.
Right. And
Yeah.
and same thing. I'll just show you guys one more example here. Let's see. I know there's another one around here. Let's see, right? I think right here, right? Yeah, so right here, quarter 2 and quarter 3. Wait, is there? Or am I tripping? Yeah, so YM. Wait, I'm kind of lost here. Yeah, YM made lower lows while NQ and ES are making higher lows. Wait, this is in quarter 2 though, but you're getting an SMT divergence between quarter 2 and quarter 4 of the weekly cycle. And that's another thing. You can do the odd numbers of the quarters, like quarter 1, quarter 3, and quarter 2 and quarter 4. That's what I've noticed. Again, I'm still live testing this, the SMTs between the quarters, but yeah, you have SMT divergence occurring here. And then of course we start pushing up, right, on ES and NQ. And again, you have one actually right here at the highs. I'm fried. I didn't even see that. ES makes a higher high. NQ makes a lower high between the quarter 2 and quarter 3, or quarter 3 and quarter 4. I apologize. And then we go lower, right? Yeah. So this gives you a potential trade idea as well of price action being bearish or potentially going to be bearish, right? Because you have an SMT between ES and NQ. ES and YM make a higher high, and then NQ makes that lower high, and then there you go. It just flushes down on Wednesday, or actually Monday, and then Wednesday makes the low of the week, and then boom, we come back up to take out this buy side up here. But yeah, enough of me yapping. I'll go ahead and give you host again, but here, let me read the chat. Motherfuckers are probably roasting me right now.
No, man, that was a beautiful presentation, man. Appreciate you, man.
Let's see.
Yeah.
Oh yeah, questions. Are we gonna do questions?
Yeah, we can do questions. Do you guys have any questions for us?
Recording stopped.
Yeah, I'm glad you guys enjoyed that.
Seems like our members enjoying it.
Yeah.
Yeah. You guys have any questions? I think you must.
Yeah, it is because of the fetch. It is because of the fetch position, bro. I'm fucking
Eating
I'm
on
up
that,
six
huh?
figures on that, bro. Yeah, I'm up
Yeah.
6 figures on that. It's crazy. You guys have any questions about higher time frame bias or anything like that? Because I can imagine. I mean, for you guys, you know, anybody in here that's probably a new trader, I can imagine some of you guys may be getting chopped up on the lower time frames, probably because you guys don't understand higher time frame, or you guys aren't using the higher time frames like you guys should be.
Yeah.
But
Zephy, can you share? Can you share your screen?
yeah, here.
Hold on.
Yeah, he has to.
Yeah. I want to start with our with your members' questions first, and then we can move on to our
Yeah.
your
he
members.
made you host.
Oh shit, my bad.
It's all good. You wanna make me host, or you wanna take it from here, Uzi?
Nah, you take it. You take it. I'm gonna help you out.
All right.
No. I don't plan on holding FET for years, bro. I'm making my money. I'm getting out.
Yeah.
It's the thing with crypto. You can't hold shit, bro. You just got to get in and get out.
Can you make me host, Uzi?
How can I do that?
Right.
Oh, right
Am I
click.
hosting?
I
just realized.
You're hosting.
Can't even see. Oh, let me right click and then what?
Right click my name and then make host.
What was your entry on Fetch? Like 40 cents.
I'm just gonna give it to Johnny, and then Johnny gives it to you because I can't see you right now for some reason.
Okay. All right. No problem.
I bet. Wait, bro. Where's your name?
Should be the only one with a screen on.
I know, but like your thing is like all up in my face, bro. I can't. Like your face is like all up in my face. I don't know how to make you host. Hold on. Oh wait. What the fuck?
You want me to just stop?
Bro, that's so weird. No, hold on. I got
Stop
you.
video.
Oh, I got you right here.
All right.
There we go.
All right. There we go.
All right. They wanna know it more in depth about the models.
More in depth about this model?
About the entry model.
Oh.
Like how do you enter?
How do I enter here? All right. So.
Can you?
Huh?
Are you live streaming right now?
Oh yeah. My bad. I was about to explain it with a. All right. Can you guys see?
Yep.
Yeah.
You know what's crazy is that SMT right there occurred during Q4.
Yeah.
10:30. Wild.
So how do I like trade my model? Well, it's very simple, man, and it's like very hard to do because you're not really used to it, entering off SMTs, right? Because I'm sure most of you guys are used to entering off a PD array, such as fair value gap, order block, and all that kind of stuff. But here's the thing, like you know, some of my members already know this is when I trade, I personally do not trade until there is an SMT, because there's no SMT, there's no trade, right? I don't want to get chopped up in like this action, right? I don't want to get chopped up in that bad action right there. That's dumb money, bro. So how can I enter off of this?
Recording in progress.
Once you see the SMT, a clear SMT like this within the macro, all you have to do is kind of like at first it'll be scary, but like you just have to trust it. You can do, since this is on ES, you can do a 5-point stop once you see the SMT right here, and then you can go to like a higher time frame, like a 50-minute or whatever, right here, and you can target these lows right here, or even like that's your TP1, or even these lows, right, which we never got taken.
Do you
But
guys ever use SD projections?
yeah, sometimes when we're at all-time highs, we use SD projections, but not
No, I
really.
mean like right there.
Oh,
Like
with
if you go
this?
to the yeah, like from that short, from the manipulation move on like NASDAQ, for example, since it took the high, you could use, you know, the projections from that 1 minute swing low and swing high. You
Yeah.
anchor it. And
One
then
sec. Let me find it here. Right here?
yeah, on that turtle soup right there. So
Yeah.
you would take the swing low, you would anchor your fib from the high to the low.
Like this?
And then yeah, pretty
Yeah.
much. It
You
just
can
gives
do,
you
you
like
can
that
target
extra.
that, right? Which is like kind of like in the negative
Yeah.
2, negative 2.5.
Yep.
Yeah. So this would be a
So
good TP.
And you could even use SD projections on the higher time frame, like the 15-minute, 5-minute, etc.
Right.
You go to the 15-minute, you would anchor it from that high to that low down there.
This low right here?
Mm-hmm.
yeah, since we've been using a lot of like 1 minute turtle soups and stuff entries,
Right.
we kinda like avoid using standard deviations and use more time, right? We know kind of where when price is gonna consolidate and when the TP is gonna get hit. It's just
Yeah.
more in depth about time, right? But we still use it, and our members still use the standard deviation. It's actually very very helpful.
Yeah.
Nice.
Yeah. And if you don't really like trust, I guess, the turtle soup model, you can also do a rejection block. Like what I was seeing here with some of the members that I have. They would have entered at the rejection block, which is like here. Which is still a rejection block turtle soup. But that is more advanced that I can't really go over in this free presentation. But yeah.
On ES, there is a pretty good one.
Pretty good one? Yeah, let me see.
Yeah, well, I mean, where that SMT is occurring, the rejection block.
Yeah.
Yeah, he has stepped it. Yeah.
Yeah. Yeah.
If you're not fine trading turtle soups, you can just wait for the as you can know the turtle soups is how the market moves, and every single move starts and ends with the turtle soup. You can wait for the turtle soup to actually happen and then use the change state delivery or use the low risk buy, like use the unicorn, use the second stage, first stage, whatever you're confident with, right? You don't need to use
Recording
this model.
stopped.
Just need to you just need to take something from it and then use it for your own trading.
Right.
Yeah, like that. -4 is beautiful.
Yeah. But went all the way through it.
Mm-hmm.
Yeah.
It's nice.
Very nice, very nice. But yeah, that is how I usually do my trading model is I basically have an indicator where it shows all of the macros, and then I would just look for SMTs. I would have all these 3 charts here. And obviously I have multiple monitors, so on my left screen I would have 15-minute, and my right screen I would have my hourly, and then right here it would be my 1-minute. So yeah. Do we have any more questions?
Man, y'all got to start asking some questions. 42 of you motherfuckers in here ain't asking shit. Come on. No, don't ask me no crypto questions.
Yeah.
Ask trading questions.
Are we going over next week too? Oh yeah, we can go over that.
Have you tried it on other assets? It works
Yeah,
everywhere.
it works everywhere. You can use it on EU DXY. You can use it on GBP USD DXY. You can use it on XAU USD DXY. Like
Do you only focus on taking trades? Yeah, yeah. No SMT, no trade, no macro, no trade.
yeah. But yeah, what Henry says right there, the criteria is a macro, throw soup, SMT, and then power of three of the 50-minute, hourly, and 4 hour, which is the open, low, high, close. That is enough to be a model. That's just our model,
Yeah,
right? Yeah, like
there's just a bunch of different models that you guys can be using. If something's working for you right now, don't
yeah,
focus on that, master that, and then eventually, if you want to dive into other concepts, other models, you can. For example, like you guys are focused on turtle soup, and
yeah,
obviously, like if you guys want, you guys could like implement a unicorn for pyramiding entry, because again, unicorns happen after the fact, after turtle soups,
yes,
and they usually work very, very well with pyramiding.
yes.
So you guys could like, there's just a bunch of different ways. Like even the ones I was showing you guys right now with like quarterly theory and SMT, that's a model in itself. Yeah, it's crazy.
Yep.
There is no turtle soup without SMT. SMT is like the whole basis of that.
Yep. That's right. But next week, what I'm really wanting to do for next week is targeting this low here. And the reason why is because we soup this and we also take these out here. So, and if you look at the wick, right, the daily wick here, we are not wanting to go higher. I'm wanting this to be hit and then this. It's a very, very basic, like what I look for on the daily. And if you break that down into a 4 hour, this is what it looks like. Right, and this is the NQ chart. You can also do this in the ES chart as well. Well, this one I don't really have the contracts, the right contracts, but on the daily, yeah, it hasn't been updated yet. But
Wait, what the fuck? Why is your wait? Go back to ES. Why is your thing like that? Turn off the set
the set
right there
right
on your
here?
bottom right.
Yeah. I
What the
don't know.
fuck is the B/ADJ button on?
I don't even have that.
Wait, what chart is that? ES1?
ES1, yeah.
The fuck? Mine looks nothing like that.
Yeah, we compared it to our other members, and some of them already have this printed, and mine is just it looks like this. So
Wait. I'm gonna help you fix it real quick. Hold up. Wait, what?
Alright.
Why is yours like that?
I don't know, bro.
Wait, right click it and then go to settings and go to symbol on ES on ES.
On ES?
Yeah, go click on it on ES.
I don't know.
See, now it's normal.
I don't know why this one's
on
like
that
this,
chart.
bro.
Yeah, on that chart down there, right click it and then go to settings and then what the fuck? That's weird.
Yeah.
I don't know why it's different on that's weird.
But yeah, same thing
strange.
with ES as well. Since we did soup this is what I'm looking for. It's this low, and specifically these lows here because they're relatively equal low. And
Yeah,
then
that's definitely getting hit this week.
Yeah, and then if you know anything about the 20, 40, 60, this will be your microstructure shift. So you can do a projection of where the 20 and the 40 and the 60 is.
Mm-hmm. IPDA, baby.
Yeah.
It's crazy, man.
Yeah. You guys have no question?
If you need projections, 5150 should be hit early this week.
Yes, this one here. It should
Yeah,
be it should be
hit
hit
soon.
early. Yeah.
Yep. So you only enter trades in macro with SMT, means you have a few moments a day where you look for trades. Yeah, yeah. All you need is one setup, one single setup, and you're done. You don't need to take many setups, right? So, and if you could pick one single macro to trade, that would be the 10 a.m. macro, the 9:50 to 10:10, because it's the 4 hour.
Yes, the 950 to 1010. It's gonna tell you guys here. This one you don't really have a good example here because we were already have the move on the NFP, most of it, but 950 to 1010. Most of this, not only that the hourly is opening, you have 1 hour, 4 hour, and 8 hour opening as well. And if you know about 90-minute cycles, you have cycles as well opening in here, new cycles, new 90-minute cycles opening.
So Benji said, yes, which macro do you prefer? And that's the best results in backtesting. You can use the 950 1010 and then the 350 1410.
Yes, that's the one that I like the most. It's the 950 to 1010 and then 1350 1410. Yeah, but sometimes I like to gamble and go in at this 920 to 940 right here, in which we have a good setup. But this right here is very, very volatile just because in the market open, right? But in this example, it's not really because of the NFP. Yeah.
Not financial advice.
Yeah.
All right.
Not a financial advice.
Any last questions you guys have? So we can move to Johnny's questions.
Yeah. Do you trade this during London as well? I personally don't trade it during London, but I do have two of my inner circle that trades these during London. Uzi is one of them, and then the other one is Shay. They have very successful rate with this.
The same pre-market.
Yes.
Yeah.
Macros are the same for pre-markets. Every XX20, XX40 is a macro, and then every XX50 and XX10 is a macro as well. Yeah, London is often probably like the low of the day and the high of the day, just because it's the manipulation phase of the daily candle. Guys, have any last questions?
Beauty. Beautiful.
If not, I'm gonna give this back to Johnny, and he can go with their questions.
Yeah.
That
Any
was
more
wraps.
questions, guys?
All right.
Any questions? Any more?
I'll give this to you just in case they have questions for you, man.
Okay. Any last questions, boys? What is that's a question for you guys. XX20, that's just an example time.
Yeah.
Johnny, since you said you don't include Friday, how does Friday act? So with Friday, since the quarterly theory it's 4 quarters, so it's Monday through Thursday. Friday, you just want to use the 90-minute cycles. So 90-minute cycles starting from the Asia open. Oh, here, I'm tripping. Hold on, let me share my screen.
Yeah.
Screen 1. Hold on, let me go to the screen only. So on Friday, you just want to use the daily and 90-minute cycles on Friday. So again, 90-minute cycle starts where Asia open. Where's Asia open? Right here. So Asia open, right when the daily candle opens, you want to start separating it by 90 minutes. And these give you your quarter one, quarter two, quarter three, quarter four. But since NFP was coming out on Friday, you want to just ignore Asia and London. It just depends on the situation, right? Like if Friday has NFP or whatever the case may be, if there's no news, you could definitely maybe trade Asia or London. But since NFP was coming out, you would just ignore all this and just wait for NFP. So if you're looking at the 90-minute cycles, which is this upper box up here, quarter one, quarter two, quarter three, quarter four, quarter one looks like accumulation. Quarter two, obviously manipulation because of the news that comes out. And then quarter three, you want to trade quarter three and quarter four. So this would be AMDX distribution up, and then X reversal or continuation of quarter three. And obviously, you had SMT right when quarter four starts at 10:30 a.m. reversal, just boom down, right? Then you had that SMT for extra confluence there.
Mm-hmm.
You know what's interesting is for turtle soups, right? When you see these highs, they're about to get taken. I don't know if you guys do this or if you guys just go like just strict point stop, like 10 points, 20 points. What I've noticed and what I've seen is with the quarterly theory or with turtle soups, if you're combining these two together and you see these highs are about to get taken out and you see that YM and ES aren't going to take the high, so it's obviously like you're anticipating an SMT here, right? With time and everything.
Right.
You could take this swing low down here and just anchor your fib from this swing low to this swing high before it gets taken.
Mm-hmm.
And then you could place your stop at the -1. And if you want a tighter stop, you could place it at the -0.5. So it would look something like this. If you're going to turtle soup it, you would just place it, you place the limit up here or you mark it, whatever. And then your stop would basically be at the -1 like that. I mean, you go for 20-point stops.
Yeah, 10 to 20.
Or you could place your stop right here at the -0.5 right here.
Yeah.
And then, aim for everything else that you're looking for.
It's a bit tighter stop. I like that.
Yeah, so it's pretty much like when you're anticipating an SMT.
Yeah.
And then you just anchor it from the most recent swing low, which would be right here, to the most recent swing high before it takes that high. And then you would get like your little projections. You would either put your stop at here or at the -1. So you can have a really tight stop or a wider stop.
And both ways, it had never got hit right here. So, yeah.
Yeah. Nice.
Good
Yes,
stuff,
sir.
man. Good stuff. They was wanting to know what the indicator of that the quarterly theory.
So I have two. I have this one, which shows you. This one's called Day by Joshua. This one shows you here. It'd be better if I just like rewind it. This one's going to show you the quarters. Like it's going to split the quarters. It's going to show you quarter one, quarter two, quarter three. And then it's going to show you the true day open, the true New York open. This is where you can gauge the Judas swings. So if it's below true New York open and you have an SMT going on below true New York open, then you can anticipate bullish price action. It's like an extra confluence. Or if it's above true open, then you want to sell above true open and buy below true open. So I have that one, Day by Joshua. Gives you the true day open, true New York open, true week open, all that good stuff. And this bottom one is called Day Quarterly Theory by 2 Degrees. So that's another one. And then I have this ICT Everything, which splits like the days up and stuff, if you guys want that. Pretty much like this. Watch. Splits the days up, which I find it like really helpful. It gives you the monthly opening, weekly opening, all that good stuff.
It makes it cleaner too. It's a clean indicator, man.
Yeah, it just splits the days up.
Yeah.
Johnny, if you recognize the current QT is A, do you even look at the next quarter? For example, Monday is A. Will you look at Tuesday? Yeah, man, of course. Again, with quarterly theory, in my opinion, you want to trade the last 2 quarters. If you're looking at the weekly profile, or whether it be 90-minute cycles during the sessions or even micro cycles, right?
Right.
But yeah.
Yep.
Any more questions? Any more questions, boys?
Yeah, I think that's it.
Yeah, I think that's
You
it,
guys want to
man.
go over some psychology before ending? Johnny, Ziffy, what do you guys think?
Oh, that's up to Johnny, man. I'm game. If you got time.
Yeah, bro. I mean,
Yeah. All right.
what kind of? I mean, I kind of just go off the questions with psychology. It's kind of like, I mean,
Yeah. Let's throw.
what do you guys?
Let's throw some
Sorry, go ahead,
questions
bro.
out there. For psychology. What do you guys want to see? What do you guys are struggling with? You know.
Yeah, and then we can just go off that.
Yeah.
Come on, 32 motherfuckers and nobody's asking questions. Come on.
I guess we're all perfect, bro. Oh, we got one right here.
Do you just have to walk away when you're on tilt? Yeah, man. Try your best to just get up and go, bro, because I don't know how it was for you guys, but I remember, honestly, I've been at many breaking points. Like when you go on tilt, bro, you're just like, I'm sure there's been lots of times where you guys have been on tilt before. You guys have blown accounts, you guys have lost money, whatever the case may be. Um, you just get tired of that, bro. Trust me. Like, just take it from me, for example. Like, I've been on tilt plenty of times, and there's just no point on going on tilt and blowing accounts and doing all the stupid stuff that you can easily avoid if you just get up and go the fuck outside or just go do something else. Like, occupy your mind in doing something else, because if you are taking bad trades, I like this because Ruman says this a lot. He says, if you take the bad trades, that's only going to result in you not taking the good trades. So if you go on tilt and you blow your accounts, you're just going to miss out on the good trades, right? You're not going to have ammo for the good trades. You're literally fucking wasting all your ammo on shit trades. You're going on tilt. You're doing stuff that doesn't make sense. And I know for a fact that all of us in here, you guys can relate to this. When you guys have gone until about 30 minutes after, once it's all said and done, once you blow the account, once you lose a hell of money, whatever the case may be, I know everybody in here probably tells himself, why the fuck did I do that? It's easily avoidable, bro. Like, you just gotta just stop, bro. Just get up and go outside. Occupy your mind doing something else. You have to occupy your mind in doing something else and realize that, there's always gonna be way more opportunities. Don't get hung up on one trade. There's hundreds and hundreds of more coming, bro. This market is 24/5, right? Like, you guys are going to have hundreds and hundreds of more trades coming. You guys don't need to just be hung up on one trade, bro. One trade does not define your whole trading. It doesn't define you. You just need to realize that there's going to be plenty of more opportunity coming. And that's it, man. And the way to do that is setting rules for yourself and being strict on them. Right?
Yeah, good stuff.
Completely
good
agree. Yeah.
I agree with that.
Yeah, man.
Right.
How do you master discipline in and outside of the charts? Gym, brother. Gym and dieting. I feel like that's what's worked for me.
Yes.
If you're strict on gym, if you're strict
Same
on
here,
diet, then you're gonna be strict on the charts. It's literally like that one saying. It's like, how you do one thing is how you do everything. So
yeah, same here. Yeah, use the same method. Yeah.
Yeah, man.
Yep. You treat it like it's a gym. Very strict.
Yeah, man.
Yeah.
For real.
So one of them said fear of losing.
You want to cover that, Uzi?
I'll let you guys take that if you guys want.
Go ahead, Uzi.
Yeah, I could cover that. Yeah, fear of losing is actually some of the stuff that I was suffering of. But once you realize that you're gonna lose no matter what, and as Johnny said, I remember when I was watching his stuff. Who gives a fuck if you lose this trade? And no matter what the outcome is, it doesn't define who you are as a trader, right? So you need to detach yourself from the outcome. And if you trade your edge actually and you don't give a fuck about what's happening next, you'll find yourself trading way more better than what you're actually doing if you're calculating like the wins. Because whenever you take a trade, I want you guys to calculate your losses rather than just calculate how much you're gonna win. Because a good trader is a good loser. Every single good profitable trader says the same thing. If you know how to lose, you will eventually know how to win. So you're gonna lose anyway. No matter how good you are, no matter how much charting time you have, no matter no matter what your knowledge is, even if you have the fucking enigma, you're gonna lose anyway. You're still a human, because this is something you've never done before, right? It's not a sport. It's not school. It's something correlated with money, and we're weak in front of money, right? So you're gonna lose anyway, no matter how good you are as a trader. So if you know how to lose, if you have a proper risk, trust me, you're gonna be a way better trader than just focusing on money. So detach yourself from money and trade your edge. That was the way for me to escape this fear of losing thing.
Yeah, dude, if you detach yourself from money and you just focus on execution and becoming a better trader, the money's going to follow. Like if you're just
Yeah.
chasing money, you're doing it backwards. You need to chase the dream of becoming a better trader, not the dream of being Lambo rich and all this other shit. That'll come whenever you are a good trader. So if you focus on your execution and you're just becoming a better trader, just your execution, your analysis, where you're entering, where you're exiting, where you're not entering, where you're not exiting, you know what I mean? Like just becoming a better overall rounded trader. If you focus on that, if you put your energy into that instead of chasing the bag, chasing the money, because when you chase money, it runs away from you. But when you focus on the craft, the money's going to follow inevitably.
Yep. Just like like if you guys, I'm sure most of you guys are funded traders. You don't like what if you actually use $50,000? Like let's say you have a 50K. Like that's only $50, bro. You have to realize that you can lose that $50 instead of 50K. Like what if you actually use your own account and like you have a losing trade and you blow that whole account, that 50K. That 50K is gone, bro.
Yeah,
So
that's another thing. That's
yeah.
another thing that I talked about on a podcast with Casper. We talked about how people, using prop firms is cool, but it's a means to an end. Like the thing about prop firms is like, okay, so like you're buying an account. Say you're buying the most expensive account on Top Step. It's $150.
Yeah. Yep.
Whoop whoop, right? A lot of people are gonna look at that and they're gonna have that gambling mindset of like, oh, it's only $150. Fuck it, I blow it. And you know what? I've been guilty of that as well. But if you were to use like a real 150K account, you would trade that way differently than a virtual 150K account, which isn't even a 150K account.
That's right.
Right.
Yeah.
In reality, you're just trading the drawdown, which is
6K.
4,500.
Yeah.
4,500 of a 150K account.
Yeah.
You pretty much have a $4,500 account. Now, if you had a real $4,500 account, you would respect that money a lot more versus because you're paying $150 for pretty much a $4,500 account. Now, if you were to put that real $4,500 account into a real live account, yes, you have to trade that differently because that's real money on the line and you're going to have a lot more respect for it instead of, oh, it's only $150. Fuck it. Like, fuck it. I could blow it. It's just $150. That from that mindset right there, I know a lot of people have that mindset when they approach funded prop firms because again, it's just $150, whatever. Right. But it takes a different type of person, different type of discipline to really get funded accounts and to really get payouts with them because you have to be super disciplined and strict on yourself to trade those type of accounts. And you don't trade a live account the same way as a prop firm account. You just don't. They're two totally different things.
Yeah. I agree with you, man. Totally two different things. Yeah.
Mm-hmm.
We got. Do you guys loss limit per week or day? And win limits? Not really, man. I just, give whatever the market gives me.
Yeah, if the setup is there, it's there. Take it.
Yeah. But yeah, I'm gonna wrap it up, guys. I thank you guys so much for coming up to the webinar here. We are gonna do more collaborations with others. Obviously with Johnny again here. Thank you so much, Johnny, for your time, and thank you so much for everybody who come to this webinar. But yeah, guys, I'm gonna get out of here. I'm gonna take care of some business. I'm gonna call Johnny right after this. But yeah, also one thing before we leave here, if you guys could do a feedback on Twitter and put something like, hey, this webinar is awesome or something like that. I wanna take it from like post something on social media. So I want you guys feedback from it.
Yeah, it'd be cool.
Yeah. So that would be really, really great, man. All right.
Also on YouTube.
Yep.
All right, boys.
All right,
We're
wait.
gonna
What's
leave you.
here? I'll just message Uzi on Discord.
Yeah. All right.
But
All right, man.
All right.
You guys have a good one. We'll see ya.
all right, later,
See
guys.
ya, boys. See ya.
Peace out.